So let's look at Eurgbp quickly. Let's try and save time. There's no time. So the key thing here we looked at from the back end, and this is a monthly time frame for EGB, and the structure have a very strong price action. We have seen it based on our strategy. Shall we FS up? So let's get straight to the point. Now I think that British pounds will continue to cool down on the euro. And this is our structure. The key thing I want to let you know here is let's take some of them out and quickly run back into the analysis. This is an ascending trend line and also potential buy floor which on price after price of beating it twice. So leaving us with the imprint of buy. So you see here 2002 and another return 2015 with a double structure of market above. Double structure is a bullish price action where market change sentiment from bearish to bullish after a massive fall of price returned there and technically left. And that would have been possible without the descending trend line formation, which you can see on a monthly time frame. So that updating that first touch, second touch, sell off, then double structure, and price is gone. And married by descending trend line creating a demand floor. Let's put it. I just don't want to waste much time. 10 minutes maximum demand floor. See if we can make it to 10 minutes deadline. We are off focus on other things. It's a demand floor. So you want to see price return back into that zone, and I will apply my vertical root strategy. That vertical root strategy, you want to see price return there using the strategy. You can easily have a mind for this month if you have a strong fundamental data print that could come down to this. So vertical root strategy says that here it's your buy. So there's going to be a buy idea because of the confluence of that structure. So set your buy order exactly where you see that cut across in the ascending trend line and hitting a sentiment switch. So at that level, you technically have a buy idea, another buy idea zone based on the strategy using the vertical strategy of this month is at this level. These are potential key zones for buy. So if you see price in any of those neighborhoods, feel free to arrest it. So on technical, we have price updating here. Very nice structure. The market is set up. I am praying. I'm praying that the price should come down to this level. If price comes back here, it will shoot up a green candle like this, like it did in 2016. In 2016, it shoot up a green candle after break of structure. After price updating here as a demand floor, updating here as a demand floor, break of the demand floor, price return here respect as a supply roof, and break of the supply returns here as a demand floor. If it returns here, it will shoot up. Instantly, you will see monetary policy change that will reverse price at that level. You know, everything about the market is well scripted. So now we have this structure, and I want to confirm if what I have said is true or not. If I am lying, I will also check and know that I have lied to myself. Explore this structure and take to the roof where the bullish rally starts. And you see exactly at the roof is where we had our last touch in the month of March 2020, affirming that this structure is real. The structure is real. So on technical, this becomes your new roof, your new supply roof. So your new supply roof will give you the zone that in the future If price swings again to peak liquidity like it has done, there is also a probability that this month candle can also spring up. So this becomes a potential sell zone where it cuts across my structure is where you hold responsible for a sell. So this becomes your roof, your monthly roof, and the other becomes your monthly floor. And I'm going to call that supply roof. This is your supply roof. We have made two touches. Most powerful week's rejection at that level, indicating that at any time price comes to that level, it's going to end up in a sell. We'll have another push into that structure. Again, Shabby FSOG will never call you or reach out to you for account management or to help you grow your money. No, 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 no. That is typical nonsense. I know a lot of traders do that. It's their choice. With my level of discipline in this space, who are you that will call you for account management? Who are you? So we don't have time for that. You're not a hedge fund. You're not an equity firm. I have no business with you. I don't talk to individuals. So our trading strategy is to align with institutional trading strategy, where we focus on mindset training and programming, and trading in a way that profit can be maximized, where limiting risk. Risk management has been some of the key things I've been studying from back end, how to mitigate risk, because every institution is only interested in traders who have proper risk management and have strategy that can approach the market in a way that is non-profitable. So you see our structure at this level, and we have here as a supply roof, and the next demand floor is going to be at this level, where you see price have shown a significant push in price. After that rally, price came back here to retest, making it another demand floor, and here will be my retest candle, and I want price to return into that zone. It's a retest candle and as well as a broken structure. It will come back. Most definitely will come back to retest it, thereby making it a retest candle and also a support become resistance and breaker structure. So if you have a pulling into that structure, you expect a potential buy. And looking at the weak rejection since 2016, the market has followed the weak rejection pattern. Like I said, trading is pattern. It's mathematical pattern. Sometimes it focuses on the body of a candle close, sometimes it focuses on the wick of a candle, and thereby neglecting the body of the candle. So if you look critically here, you will see that the market adopted wick. They have adopted the wicks as a potential areas of buy. So we must maintain it if that is what the market wants. If that is what the market wants to do, then you have no right to change it. I always say, don't change what is working in anything you are doing in this life. If you have a business, you have whatever that is working for you, there's no need to change it. There is no need to change it. The market since 2016 have been adopting a descending trend line where all the wicks are touching for a potential buy. Do you need to change it? Do I need to go for the body of the candle? So you see, the rules are dynamic. They keep changing. They are not constant. Sometimes when we are plotting our trend line, we focus on the body of the candle and forget about the wicks because we look at the pattern of the market. In this case, the market is adopting the wicks since 2016. If you stay on the body of the candle, you're going to lose trade. And I also want to throw more light to that. Look at what price have done. You see, it didn't just start here. Market first of all established the body of a candle structure from 2010. You can see that structure monthly. And let's place it on the first monthly touch after break of structure. And we got this month December 2016, we got April 2017, and price returns in the month of December 2019 and returns again February 2020, and returns again in March 2022, returns again April 2022, and made another return on that week descending trend line in November 2024 and upswing. So we must keep it because this is what is working and there is no need to change it. There is no need to say, okay, we want to focus on the body of the candle. Since the market is trading in a pattern that respects weeks of a descending trend line, thereby making it an institutional rejection zone, you have no right to change it. Maintain it, except it changes. If it changes, you change your bias. Now, the next area we need to look at again is to see we are going to clone the structure and also bring it to this level to see if it's the same. If you look at this level, you will also see that market is playing along structure. After market creating here a supply roof, he came back here to respect it. Break of a supply roof here becomes a demand floor or monthly time frame. And he came back again to respect the demand floor because before the break of structure. He couldn't pass because it came here and picked up liquidity. Here is an area of resistance that was also a previous support. And you see at that level, price has come here, respected the structure. So let's take it out so that we don't have messed up charts. I don't need that data. So when price returned again, you respected it. And when we were coming up, we respected it again as a supply rule before the break of support. So on technical, pushing here could be a demand zone. So you have a very strong demand zone on this level. You have a demand zone at 080065. And I want to put a zone to that price action. I want to put a zone to that price action. So if you see price in that zone, feel free feel free to take legal action on that zone. Feel free. Feel free because it's within your territory to do so. It's a trespass of territory. So if you see it come there, feel free to take action. So this is what we see, and I believe that EJ Eurojpy will continue to drop, and it's been consolidating on the weeks, and I mean it's okay, it's okay, but let's be very honest and stick to minimal charts. We have confidence in this reaction at this area 0.80065 into 0.7939. So I want to state those zones so that you watch it. I want you to watch it on a monthly time frame. Watch on monthly. 08 0065 and 0.7939. Look for POV for us. So this is what I see on. So I've done this is second Euro GPY, Euro sorry, Euro GBP. This is the second chart we're doing on Euro as base currency, and I feel it's a good one. Let's make some adjustment to this. I see something I do not like here, and this is a monthly candle, and we must respect it. So this is what you have in a monthly. So on technical, these are key areas that we must watch on monthly time frame as price continues to grow. There are potential reactions on these zones. So these are three key areas We are hoping for buy opportunity based on the structure of the market. See, I have confidence on this floor since 2002. We came here 2007. We returned here with a W structure 2015. Remember, they can bring you down. Look at one buy candle. Look at one buy candle in a single month in 2008. So don't overrule here. Don't overrule price coming to this demand floor. These demand floors, price can clean all of them and come down here. If you're looking at this structure, the most active among them is here. Let me show you the most active floor here. The most powerful floor. If you're a big trader, if you're somebody who trade with big capital, your capital is very big. I want to tell you that this floor, the black floor, the black descending trend line, is very strong. If you look at the price action and if you understand structure, you will know what I mean. That there is a very high probability that price will return there. Probability is very high, very, very, very high. Let me clone it and see what it does. I want to see our level of trust on this structure. Ladies and gentlemen, it's one on one. We came here as a supply roof, break of a supply roof, return here as a demand. So the structure is correct. If it didn't give me one on one, look at the wick. Look at it. Look at it. After we cloned the wick, we brought it to the floor. Now it's a retest. So on technical, you can also see that in the future, the price might return here because you don't know what Euro is doing. Big boss Lagarde has to wake up. The ECB head, European Central Bank head, Lagarde, she has to wake up. The Eurozone is really under threat. The US is messing with it. Even GBP, Japanese yen is also messing with it. I mean, they can't continue that way. We have to see the Eurozone step up so that we will protect the integrity of our dear Euro. If she doesn't do that, I foresee that Euro will continue to suffer in the FX window across all pairs. So I've extended this chart for reference and so that we can hold at least up to 2029 bias on this structure because they are all monthly candles. So we must keep our mind open that on a monthly time frame, now we have seen that the market is still in demand phase because after we broke out, the price has been trading on a demand. It didn't break here to return to supply. So what it means on technical is that we will continue to look for buy opportunity. That as you're looking for buy opportunity, bear in mind of a potential drawdown. You must put that in your mind that a potential drawdown is imminent, is something that can happen. So as long as 2025 is concerned, this remains a potential roof where I expect you to put your sell order at 0.93733. Market can trigger there and return based on what it has done before. It did something like that in April 2000. So market can dip itself there and quickly reject back. It is not easy. It's not easy for GBP to just appreciate like that against euro. It has to be contested. So this is one thing we must bear in mind, and we must put it in our mind the way it is. You know.